What is going on, guys? Welcome back to the Young Financials channel. Hope you're all having an absolutely great day today. If you take a look at the portfolio here today, yes, it is true. It did go up $776 today. And no, I did not deposit money in today. Actually, it worked out perfectly for me. I did trade options today, and I know I did say yesterday that I wouldn't be going all in on them. Actually, I really said that I wouldn't be going too far into them at all, but I ended up going about 3/4 to all in on them. And it really did pay off in the long run. It worked out perfectly, like I said, because I wanted to show exactly how risky they were. So I bought them right about here, and at the first point, they were starting to go up, but I didn't sell. And guys, greed, really, you gotta stop. You can't have greed. Okay, I had greed, and I was like, oh, this is gonna keep going up. This is gonna keep going up, and then it went down, and I was like, oh shoot. But it actually went down more than that. At first, it just didn't track it because it's moving so fast. So basically, what happened is I bought around in here, and then every time it would go down, you got to have a game plan, guys. You got to have a game plan, all right? So what I did was I would buy when it keeps getting lower. So if it went 2 cents lower, I'd buy in. I'd keep buying until I wouldn't put in all my money at one point, because then your average cost stays at that one price, and if it keeps going down, you're screwed, because I mean you can't lower your average cost. Okay, guys? So what I did contracts on was, if you go to the SPY, which is the S&P 500 index tracker, basically, it tracks the index of the S&P 500, and you go to trade, and you go to trade options, okay? So I'm going to get into a more detailed explanation of what this is in a later video, but basically the dates up here are when the contracts expire, and call is basically calling when it's basically betting on a company to be at a certain price at this point, and then a put is betting on it to be below a certain price at this point. Okay, guys, so that's kind of what this is, and I'll get to in the money and out of the money contracts in a later video. Like I said, I'm going to go into more of a detailed guide, basically step by step. I'll make a nice long video just for you guys, just going through, because I see a lot of videos not really describing exactly what options are. They do, but they do it at a very extreme level. So most of the people, including myself, when I first started, I had no idea what they were talking about. They were talking about Greeks and all this stuff, and I was like, what the heck, this is Greek to me, pun intended. But anyway, so guys, basically what I did was I went to May 21st, I put buy and then call, and then if you look in the very middle, it says share price $272.40. Now that is the raw stock price, okay? So if you go here, I went one below that, and if you see $272 call, okay? If you go all the way over to the right, it says $1.32, okay? That is what's called the strike price, okay? So you click on this, and you go contracts, okay? So a contract is basically 100 shares. You are purchasing 100 shares, not raw shares, but strike price shares of that company. So $1.32 is equal to 1 share, okay? So if you multiply that by 100, okay, that is what one contract is worth, okay? So if you want to buy one contract of $1.32, you're buying $132 worth of shares. It's 100 shares, just as a contract, okay? Now, the $1.32 is basically its own tracker as well, okay? So now you kind of have to go into the Greeks here. I kind of have to describe the Greeks a little bit so you guys know like how much it moves up, because it doesn't move up for every penny that the actual raw stock moves up. That doesn't move up. The $1.32 doesn't move up a penny as well. This is how it goes up, okay, guys? So you got to look at the delta here. The delta is what we're mainly going to focus on. For every dollar that the raw stock goes up, okay? So let's just say it's at $272, all right? Just hypothetically. And it goes up to 273 in that day, all right? The contract will go up whatever the delta is, okay? So it's 0.56, so that's 56 cents. Technically, if you round up, it's 57 cents, okay? So if it goes up to $272 or $273, the contract, which is $1.32, will be then, what is it? $1.89, okay, guys? So, and for every share you have, for every contract you have, every penny it goes up, if you think about it, since you have 100 shares, for every penny it goes up, you're getting $1, okay? So for every contract you have, For every contract. So if you have 100 contracts, okay, for every penny that $1.32 goes up or down, you're making or losing $100 for every penny it moves. So that's how you make a lot of money. Now, if you had 100, okay, 100 times 100, what is that? 10,000. If you multiply that by the actual raw stock, that's like to what? 270,000. So yeah, you're looking at a lot. It's a big difference and a big gap, and that's how you really make your money, guys. And like, you have to have a game plan when you do this, okay? So you can't just put all your money in at one point, like I said, because your average cost will always stay the same then. So what I did was I would buy really low. I would buy here, and then maybe I'd buy here, and then if it kept going down, I would buy more, and then I'd stop. I'd stop buying when it went up, and then if it went below the last point where I bought, I would keep buying more, okay, guys? So you never want to buy here, or let's just say you buy here, all right? You buy at $11 or $271. Now that would be, I think that was maybe around $1.14 on the contract about then. I mean, I can't really do the math in my head that fast, but and then you don't want to buy like up here then. You want to buy at a lower point, so you want to wait, because most of the time stocks do generally go up, but sometimes they do have dipping points, and you got to find those dipping point, guys. You got to find a pattern in it. So I was thinking, okay, well, here's about the lowest point where in the last like 3 that I would buy. So I bought them here, and then I kept buying when they went down, and then eventually they shot up. And when they shot up, that's when I made all the money, guys. So you just gotta have a game plan. You can't put all your money in at once at one point. You gotta keep lowering your average costs so that you keep gaining money, okay, guys? Because every time you buy lower, you're raising the probability of you gaining money, okay? If you put in all your money at once, there's like a 50% chance, okay, guys? For every time you lower your cost or your average cost, you're giving yourself a better percentage to gain money that day. So if you guys understand that, if you guys can put that into your game plan and make a game plan that really revolves around that, you guys will be successful, guys, okay? So that was kind of a video just describing what I did, and I will go into a more depth video, like I said, step by step. The next video will be step by step on how to do call options and everything. Sorry about that. But yeah, so guys, I just really want to make this video just describing to you what they can do to you. They can either make you a lot of money, or like you see here, break your money. So guys, like I said, I don't remember if I did this, but we are at $573 now compared to $200 before. So we're looking great in the portfolio, and I'm really happy with where things are going. The 1 month, we are 15%, well over 1,000 actually. Just about, wow, that's actually, I didn't even look at that recently, but wow, we're up $285 past 1,000. So that's really looking good. Now this is where basically our dipping point was with the lowest. But yeah, so guys, if you liked this video, give it a like. If you disliked it, go ahead and dislike it and tell me why you disliked it. If there's anything you want to see in the future, just kind of talk to me. And actually, before I end the video here, sorry guys, my throat's a little bit dry, but before I end the video here, I did have a comment asking if I could do a step-by-step guide, and yes, like I said, I will, and it will be a lot easier, because I do understand what your pain is. Because to be honest, when I tried looking up option videos, they all described it well, but not well enough for a beginner. They described them for like more of an advanced person. And now that I'm actually like really starting to understand them and how to trade them and swing trade them, everything's like falling into place. You really don't know 100% until you actually try it yourself. So I would say try it yourself with a small amount of money. Do not risk something that you're not willing to lose, okay? And I also had another comment asking if penny stocks were like contracts or trade options. And I'm going to have to say no. They're really not. And the main reason that is because, yes, you can make almost as much money as penny stocks. However, penny stocks are very risky compared to trade options, just because when you trade penny stocks, you're trading companies that aren't doing well. They're penny stocks for a reason. these, if you trade the S&P 500, what does the S&P 500 naturally do? It goes up. It naturally goes up. So, I mean, if you hold it onto it for a couple days, then like you can gain money. Now, obviously, if you hold on to it for a couple days, you have to take into account the Greeks, because theta does subtract a certain amount of money per day. It's very complicated. I will get into that in a later video. But yeah, so I mean, I wouldn't say it would be like penny stocks. I'd say it'd be kind of like penny stocks, but it'd be safer than penny stocks. That's what I would say. So guys, if you liked the video, like I said, give it a thumbs up. Any questions, anything that you saw in another video that you want me to explain more in the next video so I know and I can thoroughly go through it, just leave a comment. And everyone, have a great day.